Hello and welcome to Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is a show which gets you complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our experts, T.S. Hariyar of HRBV Client Solutions. He's a little delayed, but he'll come here. Independent market expert Dharmesh Kant and Vineeta Sharma from Narnolia Financial Advisors join us on the show. Today on Hot Money, we'll discuss the results that have recently come out. Axis Bank came out with its numbers. The counter opened strong, but it's down in trade. Avenue Supermart continues to grow in much higher with a 30% top line growth. A big downtick coming in on InterGlobe Aviation, a big howler coming in there. And we also ask our guest which is the stock pick, which is the stock that they saw that surprised them on the earnings side, on the upside. So that's what we'll discuss on Hot Money today. Let's start with the first stock, and that is Axis Bank. Now, numbers were strong, asset quality decent, but the all-important, announcement of a potential CEO change that didn't come in, and that somehow disappointed the street slightly. But what do our guests make of the numbers? What's the view ahead for Axis Bank? Is it a preferred stock in the private banking space, or do they like something else? We'll ask them. So, Vineeta, I'll start with you. Your first analysis, first cut of the numbers. What did you make of the numbers?
Axis Bank NI has grown up by 14% and the PAT has degrown by 46%.
Sure.
And this is because of the higher provision, around 46% growth in the provision. Overall, if you look at the numbers, I am liking the numbers as well as the management commentary or post results. The slippages are yet elevated. But if you look at the kind of recovery that the management is forecasting, and some of it has been seen in this quarter, so I am quite positive about Axis Bank. Also seeing the NIM, we can see some improvement in the NIM because that has been another overhang on the stock. So because of asset repricing and at a higher MCLR rate, and so I think NIM should stabilize and as well as the asset quality should go up.
I'll get back to you on Axis Bank. We'll discuss it in much more detail. But Dharmesh, your first cut on Axis Bank, seeing the numbers, are you liking what they delivered?
So numbers are okay, nothing great about it, and the hint lies in the management commentary itself when they said if the basket itself is shrinking, you cannot have more slippages. So they have gone into a defense mode, so which all the banks have done. Basically, they have not been lending to corporates. I mean, only the meritorious corporates are getting the lending done by them. Secondly, if you look at the numbers, again, they are all in the same line. Retail is 21% growth, 19% is MSME segment is growing, and corporate is again 6%, which is still a big thing. So net, no great takeaways from forward growth trajectory, and everybody is waiting for Q2 because RBI's second review will be there, and RBI is doing a tremendous job. So whatever more pain is there should be out in the second review. So post that, I think more clarity will emerge.
Okay, so that's the view that's coming in. Wait and watch by Dharmesh. Vineeta likes Axis Bank, so we'll discuss about it in more detail. Vineeta, do you all have official coverage on Axis Bank?
Yeah, we do.
So what have you told your clients post the numbers? Have you given them any targets? Have you revised your targets? What's the key takeaways that you've told your clients how they should work with Axis Bank now?
See, Axis Bank, we are valuing it at 2.1 times FY20 price to book, and the target comes around 664.
Okay.
If you look at the bank's watch list, the watch list has grown up. Management is very confident that post second quarter, one more quarter, they're expecting that slippages will be at a higher level. But overall, the whole watch list and the slippages from next quarter should take a U-turn. Even with most of the corporate lenders till date, whosoever has come up with the results, we are seeing some good recovery. Even Canara Bank management was very positive regarding the recoveries that they were seeing. So we are seeing that this quarter should be the peak of provisioning, and maybe one more quarter. And from there, the corporate lenders should give up better profits.
Okay, so another potential 100 rupee upside on Axis. Among the private banks, is Axis your top pick, or are you recommending something else?
See, if you consider the top pick, yes, IndusInd Bank and HDFC Bank have been the top picks. And if you want to ride the cycle change that is, you know, that we are forecasting regarding the corporate lenders, Axis Bank is a better bet.
Okay, Dharmesh, one interesting thing that we saw in this earnings is that, you know, companies which quality banks this time slightly disappointed, be it an HDFC Bank or a Kotak Bank, the numbers missed the estimates. While you've seen the rally that's come in PSU banks that have managed to do significantly better, and, you know, Axis doing much better than this thing. Is the focus changing here? Are you going to see a change, because people usually invest in quality banks like HDFC, Kotak, IndusInd? Do you see money flowing back into PSU banks, into Axis, into ICICI?
See, the change which we have seen till now is that NPA, I mean the asset quality, has not been so bad. The slippages are lower than what it was earlier. And if you look at the trend, this has been the trend with all the managements. Unless they are forced, you know, the neck is put onto the sword, till that time they don't provide.
Okay.
So, and that was clear in the commentaries of almost all the banks when they said, please wait for one more quarter. So why this? My take is, if you know you are not providing, slippages are getting lower and you are confident that business has picked up, slippages won't be higher, then come out, maybe we are around the corner of a turning point. But one more quarter means there's still some pain left. So it's more of a accounting jugglery which we have seen as of now, and so the numbers appear better. So I will still go with you know, doubt rather than giving it a benefit of doubt.
So what would you buy if someone has to you know, play the financial theme? PSU banking index is up 10% this month, while the private banks haven't moved. If someone has to make an investment right now, what would you recommend?
See, as far as picking order is concerned, I think private banks still stand out.
Okay.
From
and what
PSU
in private banks?
IndusInd Bank, RBL Bank.
Okay.
Even Yes Bank for that matter.
Okay.
Because there the growth trajectory has been high and they have been consistently so. 25%, 30% kind of a growth has been there. So those two stock prices have corrected after earnings. So they give you a good opportunity to re-enter.
And what about PSU banks? Do you like anything there?
PSU banks, I would like to give it a miss, because see, what happens is you do get a relief rally 20, 30, 40%, and then when the downturn comes again, it makes a new low.
Okay.
So there's still some time, because if the things are, see, on the valuation metrics, it's 0.4, 0.5 price to book, right? Historically, when the times were good, they used to trade 1 to 1.2 times. Okay. So even if you catch it at 0.7 time price to book, still it's a doubler from there.
Okay.
So why not wait for the waters to be clear and stable, then enter it?
Okay. And Vineeta, very quickly, as a house, are you recommending any PSU banks to your clients?
Yeah, we are recommending State Bank and Bank of Baroda.
Despite the rally that we've seen right now?
Yeah, despite the rally that we have seen.
Okay, fair point. So that's the view that we are getting in on the first stock, that is Axis Bank. We discussed a lot more than Axis Bank, but Vineeta is rather bullish on the prospects of Axis Bank. Dharmesh at this point of time is more on a wait and watch approach for the bank. But we'll move on to the next stock, and this is interesting. Avenue Supermarts came out with a strong set of numbers, over a 25% top line growth. We are seeing trading at record highs. So there is enough traction here, but how do you make the numbers? What's the view going ahead? We'll ask our guest. Dharmesh, firstly, a minute, what did you make of the numbers?
So numbers were again in line, and they have been consistently, you know, maintaining the growth trajectory. So 40%, 43% kind of a PAT growth is there, 27, 24% kind of a top line growth is there. Operating leverage has improved, and which management has earlier guided that as we go along the trajectory, operating leverage will be getting improved, margins will improve. So operating margin, PAT margin both got improved. So fundamentally, business-wise, nothing wrong. It's going. But what is being, you know, noticed is the fall in the acceleration of the growth rate. So now it's decelerating. So 60%, 65% to, you know, 50 and now 40s. So this, I think that it is going to decelerate further. So valuation gap is again a bit high. Though on an, I mean, the way trajectories are there, 50% kind of a growth rate, if it is going to maintain, then still, you know, 2,500 can be the valuation price based on FY21 earnings statement.
Okay.
But that has to come.
Okay, so that's the view on Avenue Supermarts. And Vineeta, what did you make of the numbers, Avenue Supermarts?
Avenue Supermart sales and profit have grown, sales up by 25%, profits up by 40%. So numbers are good, and we expect this kind of numbers in the entire retail space. Because see, if you look at the retailing, India is only 10% organized retail, while if you see China, that is 20%, US is 80%. So there is growth that we are seeing for a good long period of time. Now coming to Avenue Supermarts especially, the margins on the margins front, if you see EBITDA and PAT have gone up, the gross margins have declined. Management has taken a conscious effort to bring down the prices of the products, and also and how smart this margin will be protected, because the gross margin will percolate to the EBITDA margin. Though we expect the growth will drive because there will be enough operating leverage going forward.
Okay. So that's the view that's coming in. We'll open it up for discussion. Do you have Avenue Supermarts under active coverage?
We don't have full coverage for active Avenue Supermart. We have a soft coverage.
Yeah, so what have you recommended clients to do after the numbers?
See, we at the valuations, definitely, you know, it's around 4.2 times FY20 EV upon sales. And valuation definitely is on a higher side. So it's a stock, you know, somebody who is looking, who is betting on the India retail story, and somebody who is looking for consistent growth going forward can have in his portfolio. So it's not a point where I would ask anybody to straight away get into the stock, but definitely the stock will give some corrections, and you know, 10 to 15% decline, 20% decline would be a safer bet to get into the company.
Any retail stocks that you have under coverage that you're asking your clients to buy?
Yeah, we are liking Trent. Earlier it's been in our coverage for a long period of time, so we're liking Trent. Though business models are little different, but yeah, both are on the retail. The clean balance sheet and the way management, you know, has done the formatting of the stores, the operating leverage that we are expecting to come up, other divisions, Zara picking up, etc. So Trent we are liking.
Okay, Trent. Dharmesh, on Avenue, I think you have an issue with the valuations, but the base is obviously growing for this thing, and at the same time they are increasing their store also. So on that base, I think will the market factor in this, that, you know, sales at one point of time will actually come down to you know, normal levels and still value the stock at the same level?
So if you look at the price section of the stock, it doesn't look like.
Okay.
So market is still factoring the supernormal growth of the Avenue Supermarts, and that is the, if you look at V-Mart or a Future Retail or Reliance Retail for that matter, even if they are able to, you know, manage top line growth, but margins and bottom line growth has not been managed by them the way Avenue Supermarts have been managing. And their USP is, you know, low price product and volume growth. So
but Avenue Supermarts has always said that we will maintain margins and pass on whatever benefit we get to the customer. So I don't think margins is the right way to look at Avenue Supermarts, because they will maintain that margin no matter what. If they get the benefit, they will pass it on. Right. So that's this thing. But is the market's expectation, people are valuing it at FY29, FY30 valuations also, saying it's like 20 times FY20. So is it justified? People justified in giving being bullish on Avenue Supermarts at such valuations?
Yeah, I will give you the message. As far as margins are concerned, even if they are passing on the benefit, in spite of that, they have been able to, you know, grow their margins.
Sure.
So that's the productivity, operational efficiency, which is they are able to achieve. So that's a plus point. Just on the valuation metrics, right now, 4 rupees of EPS they have posted. If 50% kind of a growth they maintain in this entire year, so EPS would be around 20 rupees for FY19. For next 2 years, 50% again is there because expansion and everything falling into place. So by FY21, the EPS would be 45-50 rupees. So 50 rupees based on, you know, 30 PE multiple, because now it is 30 times. But if you are growing at 50% with a good ROEs, you will get a 50, at least a 50 multiple. So 2,500 is, you know, the price comes out to be on the valuation. And this is a conservative estimate where the PEG ratio is 1. So that's the reason why you are getting this entire, you know, stock price thrust going up. My own sense is it would be difficult from here on. See, the moment you reach 20,000 crores kind of, you know, sales top line revenue, from there to grow at the same pace is difficult in India. So that we have seen in even Reliance Retail. So once the, you know, volume they achieved, but margins and the bottom line was not there. Avenue Supermarts is having a bottom line, But now they are reaching the threshold level where the bottom line will start, decelerating.
Anything in the retail space that you like? Are you liking the retail space as such?
Yeah, V-Mart is looking good. Valuation-wise, there's a comfort out there. Though the rally was then sharp rally, then it corrected. But V-Mart again is a good option. But I think as of now, one should be having both in the portfolio for next 2 years.
Okay, so that's the view that's coming in on Avenue Supermarts. Obviously, people are impressed with the numbers that have come out, so it's a wait and watch that we need to do with the Avenue Supermarts. But retail as a sector, I guess, like them, Trent is one of the stocks that Vineeta has said that they are pushing to their clients. V-Mart retail is something that Dharmesh has been speaking about, so we'll watch out for all those counters. Now, the big shocker that came in yesterday was the number of InterGlobe Aviation is down almost 8 to 9% the last time I checked. One time it was down almost 11 to 12% in trade. Obviously, one of the more expensive stock on the aviation front. It's corrected significantly, and a lot of issues have gone to it. It's down almost 35% in the last 3 months. Firstly, we'll ask our guest how they analyze the number, and secondly, we'll ask them what they feel about what should be done. So, Dharmesh, what did you make of InterGlobe's number?
See, I am very happy that I was right on the aviation space from last September onwards. So, when jet was rocketing to 880, 850 kind of, I was saying it's a sell. So this is what happens in an industry where you cannot pass on the rising cost to consumers. So low cost carriers, the first thing is you cannot increase the ticket prices. Volume growth would be there, 15-20% will be there, which they have also done. Even 14% kind of a volume growth, even InterGlobe Aviation is managed in spite of all the hiccups and regulatory problems coming the way. But 40% increase in cost, and you are unable to increase your top line, I mean realization price. So this is where you land up. So, such sectors should be played as a cyclical trading play. When things are in favor, go and buy them. When things start turning bad, just sell and sit on the profit.
Okay, so that's the view on Indigo. We'll talk about it in much detail, but what did you make of numbers, InterGlobe?
InterGlobe, we are neutral on the stock. Last quarter also we went neutral on the company. Overall, the rising ATF crude prices and the forex loss because of rupee depreciation, the forex loss that is coming. The PAT has not, the sales have not been able to absorb the cost, and the profit is around 28 crores, which is very poor. What I am forecasting right now is not only InterGlobe, not only on just the PL side. If you look from the management, since the management, the whole top degree has changed. So the overall strategy right now, what Indigo will play, is very important for me, because they have brought themselves as a low-cost carrier, and now what they have in mind will hold the key for next.
Okay, so we'll discuss Indigo in more detail. You move to a neutral, that means you have active coverage on Indigo. What's the target, and what have you told your clients to do post the numbers?
See, we were neutral last quarter only, so right now we are still neutral on the
you
stocks.
Don't have active coverage. Do you have a target price that you've given clients on Indigo?
No.
Okay,
last time we have turned neutral, so we have not given any target price. See, overall neutral, in the sense, see, if you look at the business per se of aviation, it looks very very encouraging business, because it's still in a nascent stage in India. And in InterGlobe, the way it had picked up the business and done price competitiveness and come up like a low-cost carrier. Right now, they are foraying into international business, and they have added more sites on their sphere. Being an international player, it will not be that easy to have the same strategy what they were having in the domestic space. Surely the whole strategy, the cost front will change. They have also not only ATF and the landing cost, that is one thing which is very evident has gone up. If you look deep into it, even the employee cost, the kind of employee hiring that they are doing some foreign people. Obviously the cost will expense will go up. So it's already risen from 8% employee cost, it has gone up to 10 to 11% employee cost, and this will again, it will impact some 2 to 3% margin again going forward. So overall, how the strategy of the new management will be, it has to be first clear what they have in their mind and what kind of placement they will put for their company before we start analyzing, I mean, what has to be done.
Okay. Hi, Harrier. I think traffic kept you waiting, but we were just discussing how the numbers of Indigo. What did you make of InterGlobe's numbers?
I think bad. Unfortunately, the vulnerability of Indigo to crude seems to be too high. And if you look at the latest cues that are coming out, the way Saudi has been blocking the the two VLCC tankers in the Strait of Red Sea, I would believe that this pressure on price is going to come back. I think sooner rather than later the price is going to come back, and that means your ATF price are going to be the higher side, and that is not great news as far as Indigo is concerned. I also feel that the bigger worry is the gap between the RASK and the CASK, which is what determines the spread for Indigo. That is also compressed quite drastically in this particular quarter. So I think overall, short to medium term to me looks a little, I would say, loaded against Indigo. Probably long term it could be a good level to get in, but I think it takes the next 1.5 years. I don't think I would be too keen on getting into the stock at these prices.
Okay, you would expect more correction to come in. Do you think that still it's overvalued?
It would depend largely on the price of crude. I think if crude probably gets beyond 80, we could see a serious correction from these levels on the stock. Okay.
And Dharmesh, you said that you were always negative on this thing. Most of the aviation stocks have corrected 40-50% to this. Are valuations now in your comfort zone, or do you see more correction coming in?
I think at this juncture, Jet Airways does look attractive.
Okay.
From what, again, a trading buy.
Okay.
Because the stock price has corrected significantly, and the type of problem which InterGlobe is facing with the aircrafts issues, technical and glitches which are there. So this traffic will move. So, and then the concentration will be there again in the aviation space. So my feel is that crude is done for now.
Okay.
You may have 1-2 spikes here and there, and then you will, crude will correct to 62, 63 kind of levels. And the reason is, historically, if you look, when the political, bodies start making noises about crude prices going up, that is the time when it's getting topped out. So that's happening. So Jet Airways does look good.
Okay, so that's the view that's coming in on InterGlobe Aviation, more of a cautious view that's coming in on the stock. And the final stock that we want to talk about, we're asking our guest, we're almost midway through the earnings season. Lots of numbers have come out, mid cap, small cap, large cap. Is there any one stock that they felt, outperformed in terms of earnings that made them take notice? So, Hari, I'll start with you. Which was that number that, caught your eye, that you believe that, it was a fantastic number and the growth trajectory is really good for that company?
Quite a few stocks. In fact, I would especially point out some of the PSU banks. But if you were to ask me to highlight one stock, I think it's Hindustan Unilever.
Okay.
Both in terms of the top line growth, which I think went into the double digit, and the bottom line growth, I think Hindustan Unilever is one stock that has shown real good traction. I think what we should also understand is that in the last couple of quarters, Unilever has started getting the benefits of lower GST, a more, I would say, calibrated structure of logistics. I think all these things are now getting into Hindustan Unilever. And the outperformance is not just from HUVR, it's also come from ITC, which is again, I think, a fairly, I would say, large FMCG stock. So I think from a sectoral perspective and also from a stock-specific perspective, to me, HUVR remains the biggest positive surprise of this quarter.
Okay, and are you comfortable with the valuations, or are you finding them, if someone wants to take a position in HUL, would you recommend accumulating here, or are you concerned about the valuation?
You can do a phased buy. You don't need to put all your money at one shot. You can do a phased purchase. But I think if you wait for right valuations on these kind of stocks which are getting re-rated, you may have to wait for too long. So probably start now and do a phased buying over the next 6 months or so.
Okay, so HUL is something. Vineeta, what was the result that caught your eye?
We are liking L&T post its numbers. The sales has grown by 18%, profits have grown by 40%, 40% plus, and L&T margins was a surprise for us, and it has been on the better side. If you look at the management commentary, management is planning to take the sales level to around 2 lakh crore by FY21. Sure. The EBITDA margins they're expecting to increase by 1.5% on such a big base. That calls for a real hats off. Secondly, the kind of divestment plans the management is having regarding all the businesses, it's planning to come out of the non-core businesses, and these all put together should take up the ROE. Once the ROE for L&T improves, already the company is it's construction giant, and if the ROE improves, it's the safest, largest bet that you have in hand. So we're liking L&T, and we have a price target of 1700.
Okay, 1700 is the target for L&T according to Vineeta. And Dharmesh, finally, any number that you saw that caught your eye and you were surprised?
Nothing as such. Everything was in line. And as far as consumer staples are concerned, likes of HUL, ITC, it's because of the low base, these numbers are there. So, and benefit of GST is already there. So unless, maybe one has to wait for one more quarter. So if PSU banks, they are able to deliver the same set of numbers with lower slippages, then they will be a big buy, but not now.
Okay, so let me put it other way. Was it something that caught your eye on the negative side? Some number that, caught you on the wrong side, saying that you were expecting a good number and it came out to be a very bad number?
Not really.
Indigo?
Indigo, I was expecting reported a loss, in fact. So they managed 27 crores was a benefit to them. I don't know how they managed even 27 crores of profit.
Okay, so that's the view that we're getting in on these stocks. So HUL is something that caught Hari's eye this time around. Vineeta likes L&T. They've recommended to clients. Nothing. It's an inline quarter according to Dharmesh. But with that, we're timed out on hot money today. Hari, thank you for coming in today. Vineeta, Dharmesh, thank you so much for joining me on the show today. Ask BQ comes up next. Stay tuned to BloombergQuint.